Ninjatrader website. Everybody could see we have a promotion going on through August. $200 up to $200 commission rebate. We'll talk more about that later. We're going to dive right into the markets, some trade ideas really quickly at 9 o'clock once we get started here. And also have a discussion about risk before we get going. Hope everybody's doing great out there today. It's beautiful here where I'm at. The weather's perfect. Feel free to jump in and make comments or tell us what's on your mind at any point today during our presentation or during our interactive dialogue, I'd like to call it. Interactive dialogue. I think that's better. You know, I learn a lot doing these things, and I appreciate all the comments and feedback we get from everybody, and we're going to keep doing them going forward. So thanks for being here, and we're almost ready to get started. So I'm going to put myself on mute for a couple seconds here. I'll be right back. All right, let's get started here. My name is Jim Cagnina with Ninjatrader. Today we're going to look for some trade setups in the E-mini S&P and maybe a couple other markets. I do want to remind everybody that trading futures options on futures involves substantial risk of loss, not suitable for all traders and investors. Oftentimes in futures trading, you have a high combination of leverage and volatility. And although that could be an equation for opportunity, which is why we are all here, it's also an equation for risk. So be careful. Only fund your futures trading account with risk capital. My personal definition is money I could afford to lose, doesn't change my lifestyle, doesn't lengthen my retirement horizon, and doesn't overly anger Mrs. Caggs. Now, the third part's a little tongue-in-cheek, but not really. Stress in life matters. Be in a good place. You know, easy on the risk capital. If you're not sure where you fit, give me a call. Everybody here is unique and different. We understand that in different parts in your life and financial circumstances. Welcome an opportunity to talk to you about it. Alternatively, you know, you could fund a Ninjatrader account for as little as $400 to start getting a real experience of the software and how the markets work. So keep that in mind also. Any questions on anything risk related, let me know. We're not going to talk about past performance today. We never do, as a matter of fact. We are going to focus on a real-time practice account, sim account. I'm in simulation mode today. Real-time data, all the bells and whistles on the Ninjatrader trading platform. Let's do one last sound check before we get going here. It's 10:01. David, how are you? I'm doing well. Thank you for that kind greeting. Let's just do one more. Sounds all right. Good. Sounds good. It's all we really need to know. So, you know, right here, I have my screen up, and the way I like it, you know, it's totally, the Ninjatrader software is great because you could create your own workspaces. If you have more than one monitor, which I do, it makes it a little easier. But since we're doing a presentation just on one monitor, I have everything squeezed in a little bit. So let's take a look. The very first thing I want to look at is, you know, what are all the markets doing here? And on the right-hand side, I have my market analyzer. And, you know, like a quote board kind of situation, you could customize this any way you want. And I have, you know, the stock index futures at the top, interest rates next, energies, metals, and FX futures or Forex futures, and kind of just look across the board, see what's going on. Not a lot's going on. We're a little bit in this kind of summer, end of summer, not doldrums, but, you know, calm, I'll call it in general. And you could take a look at the volume on the E-mini S&P. I mean, it's already 9 o'clock Chicago time, and we've only done 224,000 contracts. Small, low volume day today across the board, which could be good. It could be a great opportunity for us because generally in low volume days, you might see a situation like we do today where we have a small daily range that's trading around kind of a point of control. And I'll talk about point of control in more detail in a second. So that's a good thing. Look at the micro ES is, you know, almost done as much volume as the regular E-mini S&P. Look at the micro NASDAQ, 211,000. That's getting a lot of traction. That's a really good market. We'll take a look at that also closely. And everything else is kind of, you know, close to unchanged, not that big of a deal. You know, bonds are down, I don't know, a little bit, you know, 2/3 of a handle, 2/3 of a point. on the ultras, and then on the regular 30-year bonds, it's really only down 10 ticks, kind of sideways. So not that much excitement with respect to anything going crazy, right? So let's take a look at just kind of the very first thing I like to do is say, all right, what's the state of the market here? And so I'm going to open up my ES chart, and it's just a daily chart. This is a daily candle. That's all it is. And the candle is just a graphical representation of an open, high, low, close chart. Is really all it is. So looking at this chart, what's the state of the market? In other words, I want to create a daily bias. I want to create a bias. Is my bias bullish, or is my bias bearish, or is it uncertain? It could be sideways. It could be uncertain. Clearly, just looking at this with nothing else going on, I'm going to say, my bias is bullish. I mean, this is stock index futures. I mean, these things have been rallying like crazy since 2008. We do have price dislocation happen every once in a while, which is going to continue to happen as well. It's hard to predict exactly when, but right now I'm looking for places to buy in general, right? Because my bias is bullish, right? We're making new highs again, almost on a constant basis. And right now we've got to have kind of small candles last couple of days, not too surprising. So that's all. I'm not going to draw a line. I'm not going to put a Fibonacci up. I'm not going to do anything other than, hey, what is going on long term with that particular market? Let's take a look at the NASDAQ, micro NASDAQ, which is going to track parallel to the regular classic E-mini NASDAQ, if you want to call it that. I do have a line drawn here, though. I mean, again, bull market. This is strong. My bias is bullish on this market as well. In this blue line I drew right here, just is kind of like, hey, we had a area resistance, and it's a general area resistance, right? It's not an exact number, but area of resistance for a long period of time, and then we rallied through it and we closed above it, right? So that was kind of an interesting kind of movement. When you have closes above areas of support, or areas of resistance, or closes below areas of support, you usually have some follow through, and we did have a couple of follow through days after that really big green candle. All right, so let's take a look at crude oil real fast. I don't have that much data on my crude oil chart. Nothing to write home about. We're just kind of trying to rally back up. If you could draw a fib line right here. So I'm kind of cautiously optimistic that this market might actually settle down with a doji-like formation if we get one today. There's going to be a big number coming out later on today by the Energy Information Administration, and that's going to drive prices on this crude oil market. That was the micro crude. Here we have, what's this chart? This is my bonds, ZB, US 30-year U.S. Treasury bonds. And this is a really interesting market. You hear the conversation about yields all the time on the television, on Bloomberg, on Twitter, wherever you're getting your financial news from. It is, really yields. Yields are low. Interest rates are low, and all this stuff is driving asset prices with respect to the stock index futures in a very strong positive direction. So I like to keep my eye on the 30-year U.S. Treasury bonds. Remember, the price of the bonds is inversely related to the yield. So think about that. So when we're kind of railing up like this, yield's going to go down. And I think we saw that in the last day or two. Okay, so having just kind of glanced at the markets that are important to me, let's go ahead and open up a 10-minute chart. And I will take some questions here. Feel free to type them in as we go. Ray says, need some red, green. Sorry, I don't have my glasses on. And I have the question box on my laptop, which is kind of a smaller screen. But it says, need some red, green color on market analyzer to indicate nag pass price. Yeah, we could do that for sure. We could customize the market analyzer to give you that effect if you like. The blinking lights freak me out sometimes, so I like to keep it simple. We're going to talk about order flow. That's for sure. We're going to talk about order flow. So I have a 10-minute chart here. This is the chart I'm looking for today, and I have a relatively simple application up here right now. I don't have that much that much data on here. I have an oscillator of choice at the bottom. I'm using the RSI. There's a whole bunch of different oscillators that you could use on the NinjaTrader software, and I'm just going to go ahead and show you that list right now. I mean, all of this stuff, all of these indicators are available on the left-hand side. We got the McLean oscillator, they got the CCI, Commodity Channel Index, which is an oscillator, money flow oscillator, a rune oscillator. It just goes on and on and on. And, they're all similar, right? An oscillator, what it does is it oscillates between a range, right? In this particular case, RSI is between 0 and 100. And, there's conventional wisdom is, hey, once the RSI is over 70, then the market's overbought. Once the market's below 30, the market's oversold. I don't subscribe to that much. I like to consider, hey, 50% is the 50 line is in the middle. And I want to see 50 line crosses, right? I want to see 50 line. I want to see this oscillator cross that 50 number. And I want to see it cross with gusto, like a lot of energy, a lot of speed. So that's kind of what I'm looking for when I'm taking a peek at the RSI. The other thing I have here on the left-hand side is order flow. This is the order flow version of the software, very powerful. You can see my volume profile over here on the left-hand side. I know that maybe the light blue and the dark blue is not the best colors. We could change the colors pretty easy. But it's light blue area here is showing me the value area. And then the blue lines on the top and the blue lines on the bottom are showing me prices above and below value, with the actual orange line being the point of control. And that's kind of, there's extension lines that go all the way across that I've created, so we can kind of see where we're at with respect to that. Right now we're trading, above, right above the value area. We're approaching what's called the second standard deviation band here. This is VWAP. I've added a VWAP to this particular chart, volume weighted average price, right? And the unique thing about today, I think, and yesterday, and even the day before, is that we're in a relatively low, small range, right? Relatively small range. There's not a lot of economic news coming out. There's not a lot of stuff coming out that's going to impact this. All eyes are, I guess Jackson Hole Summit is going virtual. I think it starts today. And then from an economic release point of view, there hasn't been that much stuff. The expectation is, what's the Fed going to do September 22nd, 24th with respect to tapering, if anything? And that's a whole different conversation that we could have later on today. Because right now, though, I want to look at a trade idea, and I want to use the charts. And I want to use the candles to tell me, hey, where's a good trade idea here? And so right now, I really want to see this point of control act like a magnet, right? Act like a magnet. And I'm going to use these, even though my bias is bullish today. I really, I want to use this is the first standard deviation, the second standard deviation of the VWAP, the third standard deviation of the VWAP. And I want to use that area of interest to kind of keep me from keep me in check with respect to the range that this market potentially has to offer. So let's take a look at the actual candle here. So this candle right here is just not a big candle. You could just go ahead and click on it, and it shows all, with your mouse roller in the middle of your mouse, it'll show you the statistics of that particular candle right now. High to low, it's, not even two handles. It's a very, very small candle. And then the previous candle, high to low, 3 handles or 3 points, not particularly big either. So, but we're kind of driving up. I'm going to draw a rectangle here, which is going to show, which is going to kind of be like a general area of resistance, right? So I'm going to go ahead and find my rectangle tool, and I'll change the color so we don't totally freak everybody out with too much blue. All right, and right click on that. Ninjatrader, everything's right click. It's really kind of easy. So let's go ahead and change the color of this to orange. We'll change the outline to orange, just so we could kind of highlight a little bit better for the presentation. Okay, so that's my area, what I'm going to call my area of resistance, and it's not an exact science, right? It's not an exact number. It's a range, because the futures markets are a little bit, volatile at times. Not today, but a little bit volatile at times. You have an area of resistance or an area of support if it was down below, and here's our area of resistance right now. And we'll see if this candle could close into that area or not. We already have 1, 2, 3 out of 4 candles tried to close in there and couldn't. And this is the fourth one. We have time still. Let me just kind of make this a little bit better so I can see my clock. We got 6 more minutes before the next 10-minute bar pops up. So we're going to be patient and see how it goes. Anyway, we got a whole bunch of questions here. We're seeing order flow now. This is uploaded to be rewatched, Nelson, on the Ninjatrader YouTube channel. It's not immediate, I don't think. I think it takes, an hour or 2 or something like that for it to materialize on the YouTube, the YouTube channel. But it is going to be there at least temporarily for a while. So feel free to go ahead and watch that. But keep in mind too, that we do these things all the time. And starting in September, we have a whole bunch more events scheduled. So keep that in mind. Wilson says, what's your thoughts on Bollinger Bands? I don't know. I think Bollinger Bands it's a fine technique to use. Obviously, if I throw a Bollinger Band on here right now, it'll totally clutter up my chart and kind of make it almost impossible to see. There's a general rule I like to tailor, and I suggest to everybody, tailor your technical analysis technique to your personality. Right. I'm relatively simple. I used to be complicated. I had all sorts of stuff on these charts, and I've kind of come around circle in my 20 plus years of doing this. And I've decided oscillator, moving average cross, which you could see in the background. And I just started experimenting with this particular VWAP as well. But typically I wouldn't have the VWAP up here. I would just simply use my moving average cross. I would use my area of support and resistance, and then I would use the oscillator down at the bottom in conjunction with the volume profile. So I'm going to take off the VWAP right now just to kind of give you a better feeling for that. Order flow, it's called order flow VWAP. I'm going to go ahead and I'm just going to remove it. I'm going to hit apply and OK. And there it is. This is typically what I look at. That's it. I mean, nothing to write home about, nothing extravagant. I got the previous day's high, dotted up here. I got the previous day's low dotted down here, and that's it, right? So volume profile is going to tell me a lot. The candle is going to tell me a lot. And we have another 4 minutes here. So even though we're trading way well into my, my magical rectangle, which isn't really that magical, I just kind of made it up, but my area of resistance, we want to see a close in here before we declare victory on this particular price move right here. And we have 3 more minutes. So we've seen all sorts of stuff happen here. And this, again, the bias is bullish overall. We have some pretty big wicks here. So let's go back a few candles. Big wick at the bottom, that represents buyers coming in. Big wick at the bottom represents buyers coming in. Big wick at the bottom represents buyers coming in. And we have a higher low, higher low, higher low, higher low. And now a higher high, higher high. So again, this is kind of a bearish pattern, bullish pattern right now. Let's see what happens here in the next 3 minutes before we make a trade idea. And we'll trade decision, I should say. And we will go from there. But in any event, going back to Wilson, Bollinger Bands are fine. I mean, once you get your stick going and once you get your muscle memory, you kind of recognize how price action goes and how to use them. It's a perfectly fine technical analysis technique. It's just not my cup of tea. It's not my thing. Alex, yes, recording on the YouTube channel for sure. Zoom in and out of your charts. My minus magnifying glass is, well, so what I do is I just going to grab the X and Y axis and I'll squeeze it in and out. I just kind of grab my X and Y axis, squeeze it up and down, and then you hold your control key down and then click on the chart, and you could kind of manipulate it that way. So it's pretty easy to kind of create your workspace that way through it. I think you're referring to the zoom in, zoom out buttons. I never use those. I'm completely focused on just the x-axis, the y-axis. This is from my high school math. I remember this. And then, oops, I'm sorry, oops. And then control, grab the screen, and you're good to go. We got 1 more minute here, so it does look like we're going to actually close. I don't want to speak too soon. It does look like we're going to actually close on this particular 10-minute candle in my rectangle. What does that mean? It means I got to move my rectangle up for starters, and then secondly, we'll kind of make some decisions exactly on what to do next. Now we're still not there yet. We got a couple more seconds left before the next candle is formed. Yeah, you could definitely pull the volume profile over to the right-hand side of the screen for sure. It kind of it'll cover up the candles a little bit, but it's certain. I'll show you how to do that as soon as this bar forms, because if this bar forms the way I think it's going to, we might want to consider actually an entry. Okay, so it closed in my area of rectangle right now. You can see that. So, this idea, but it didn't close that much, right? It's not like it's like crazy out of control. So literally 87 was a high on the green part of the candle. It's only a couple ticks, but we're still driving up right now. So I'm gonna sit in my hands. I'm gonna be patient. In my opinion, it's the best thing you could do is be patient and wait. The other thing I do want to point out is on days like today where there's low volume and a very small range, maybe it's okay to amp up your leverage a little bit. So be careful. Instead of maybe 1 contract today, we're going to do 2 contracts today. Let's just see what happens in this next particular candle. To move the order flow, yeah. So again, you just literally right click, and then you get all of this menu options on here. I'm going to go to indicators again. And then at the bottom, I'm just going to look for order flow volume profile. And you have all of these different settings. So profile alignment left, if I want to change it to profile alignment right, it's really easy to do. I hit apply and OK, and it moves everything over. And we can keep it like that if you prefer, for sure. But I'm going to have to move my rectangle up. Whoops, I want to do that. Too many clicks. And, we're just going to keep it rolling here. We're just going to keep it dynamic, keep our toes in the water here, getting ready to go. I'm going to go ahead and make sure that my chart trader is on. I'm going to make chart trader hidden instead of visible, because I'm just going to click on the chart to make my trade. It's really, really that easy. So let's see if we get a lower high here and if this thing settles down or not. And if it doesn't, we're going to be patient again. But again, this point of control on days like today, which is this longest volume bar right in the middle, often is very powerful. We're a long way from this point of control shifting to another level. In other words, for market happiness, buyers and sellers agreeing that this is a really good price for this market. This is how it should be priced. There's no challenge to the point of control up high where we're at right now. And I think that's the function of a low volume day that we're in right now. Ray, hopefully that helps. I got to scroll down on this thing. It says 10 new messages. Hang on a second. So I got a second. Ray, no worries. Tova says, got message on screen saying maximum accuracy, please run resolution. Not sure what that means, Tova. Is that a Ninjatrader message, or is this just as a regular computer message? Cecilia is asking a comparison between Ninjatrader and TradingView. This Ninjatrader is a award-winning development-based platform that's very heavy duty. and has significant amount of abilities. I believe that other platform you're referring to might be web-based, browser-based, instead of a serious software that you download. So Ninja wins hands down in my opinion on that. So just pretty much any feature you could think of is available on Ninja. And if it's not, there's a whole ecosystem of third-party indicators that developers have used to generate their own little thing some of them are free for everybody and some of them you have to pay for. But I can't imagine a scenario where, hey, there's I want to do this, but I can't in NinjaTrader. It'd be tough to find that that scenario, to be honest with you. So from YouTube, Ken asks, will you make your workspace available to us? Well, hang on a sec, though. Before we do that, we have a really interesting development here on this chart. So right now, again, we're kind of driving back down. This is a scenario where we do have a lower high so far. I know this candle's not formed yet. We're still trading in prices above value. But given the nature of today in the small range today, I'm inclined to try to go short at a certain point. If we could peak up again, I'm just going to right click. Well, I'm going to use my crosshairs to make it even more precise on my price entry here. So I don't know, let's say 87 even. I'm going to right click. I'm going to send an order. So this would be a limit order, right? I'm trying to sell one at 87 even, right? So remember, in futures trading, you could sell before you buy, or you could buy first, sell higher, or sell high, buy lower. That's the key. That's the goal, right? That's our goal. So I'm just going to go ahead and throw that order in. It's a limit order, right? And we're in simulated live mode. So if this was a live account, this would be sent to the CME Group exchange. It would be waiting in the CME Group order book on a first come, first serve basis. You'd be in line waiting to get your fill. So the other thing I'm going to do here is I'm saying, all right, I want to put my stop in here. I want to have a stop loss in, and I'm going to look for the high candle in my zone, and I'm going to add 8 ticks here. So I'm going to go up to 95.50. I'm going to go ahead and put and set a buy stop market in. So I have 2/3 of an anatomy of a trade, right? Every trade has an entry, a stop loss, and a profit target. And I don't care how sophisticated you are, that's the anatomy of every single trade on the planet, right? You could have a multi-target stop. You could have a multi-target profit targets. You could have also, trailing things that are trailing, and you could do that really easily with NinjaTrader. But pretty much the anatomy is basic, right? It's simple. You got an entry, you got a stop, and then you have a target. Now this stop is a protective stop, right? So this is in case, hey, I'm going to sell market. I want to sell a contract up here. Hopefully I get filled up here, and then the market comes back down, and I could buy it lower. I could buy it lower for a profit, right? So that's what I'm hoping is going to happen. And I don't have my profit target in yet because I want to get filled so far. So in those cases, this stop this is a protective stop, and I could be wrong. I could sell a contract up here, and the market could rally against me, and I'll be losing money. And I want to hit. There's a certain point when I'm going to admit I'm wrong, right? And I'm wrong a lot of times. So, so in any event, and the other thing I'm not going to do is I'm not going to chase this around a lot, right? So we're just going to be patient. We're 3 ticks away from getting a fill, 2 ticks away from getting a fill, hopefully. And patience is like the number one thing in my world. If I had to do a top 10 trading rules, the patience would be in the top 3. For sure. I don't know. I got to think about it. If it would be number 1 or not, number 2 or not, number 3 or not. But it'd be up there. It's a biggie, right? Patience, and you got to wait. And the hard part about patience is when you're trading with live money, you have a scenario where you have a phenomenon that happens endocrinology. I can't even say the word, in your brain, in your head, right? You have serotonin, dopamine, adrenaline, all of these chemicals that are kicking in, right, and making you a certain way that you don't have control over. You can't adjust that. There's not like a knob anywhere where you could turn the turn the dopamine down. You can't do it. So the trick is, once you adjust your thought process, once you adjust your behavior to say, hey, trading is different than everything else that you do in life, and these natural instincts and fight and flight responses that you have to curb, and you have to be cognizant of patience. You have to be cognizant of what's going on, and then just maybe you do something else. Maybe you put your order in and you leave. Maybe you study another market, or maybe you just watch it like I'm watching it. But Mark Douglas wrote a great book, The Disciplined Trader, a long time ago, that talks a little bit about this. How to kind of behave differently when you're trading than you do in real life. And that's a big thing for me. So anyway, I know I'm off on a tangent here. I've been talking about this for way too long, but okay. So this is a good question too. I mean, Rodolfo asks, how could you tell an instrument will have volatility? Well, good question. I don't know. I mean, you got to look at it, right? I mean, there's two different kinds of volatilities. I think there's volatility in the E-mini S&P market, which is a phenomenon because it's so popular. There's a huge notional value traded. There's the bid-ask spread is tight. A lot of different market participants are involved, right? So that's kind of number one. And then there's another type of volatility that you might see in like the NASDAQ market, the micro NASDAQ market. There's less participants, but there's a lot of price action. In other words, it moves around, and I like to say, like popcorn, right? So it bounces around. It's like popcorn, and it ends up close to a point of control. It ends up a rational market, but because it's thinner, you do have bigger tails, bigger wicks, larger candles, and things. And so you have to be cognizant of that. Treasury bond futures, they move very deliberately and very slowly, usually, although they could also move quickly, but not as often. And so it's pretty much what's the volume of the market? What's the bid-ask spread? And then how popular is it? Those are the three things that I like to look at. All right, so we just did get filled, right? We're short one right now. Okay, so, and then up in the control panel, it should show me something. Where's my control panel at? Oh, I made it mini. Okay, so it will move around. It'll show me my unrealized P&L. Unrealized P&L is P&L that it's dynamic. It moves around as the market price moves around, and that's on open positions. Realized P&L is on closed positions, and when you add them both up, it gives you your gross P&L for the day, right? So that's just a little, for those of you who are brand new to futures trading, that's what that means. So now this little, what do you want to call it? A flag, I guess, or label. You could adjust things with it, but this is showing me I'm up 1 point, right? And each point has 4 ticks in it. And then red means I'm short, right? If this were green, where this 1 is, it would mean I'm long. And it kind of moves around. My stop is still up here. We're going to think about that stop placement in a second. And the other thing I want to do is, okay, now that I'm in a trade, where do I want my profit target, right? What do I want to try to make money on? So a couple of different areas of interest. One is at the point of control, which is this orange line right here. And let's just go ahead and put an order in there. I'm just going to right click and try to buy one there. Okay, so this, you could consider this a conservative place to put it in. If we were down lower on the light, where the light blue hits the dark blue, there would be more aggressive place to maybe try to get out. And so there's all sorts of different order management techniques here. So I'm going to leave it here at 43.50, and we'll just kind of be patient and wait and see if we can go ahead and buy it back lower. My stop now, now that we haven't penetrated my rectangle, I'm going to move my stop down tighter just in case. So I'm just going to grab it. Oops, I didn't want to do that. That was bad. No. Just going to pull it down right above my rectangle there. All right, so now I've tightened my stop. So I've kind of, minimized my risk a little bit more. And we're approaching our limit order right now. And, we're going to be patient. We're going to wait. We didn't quite get to the point of control yet, but, it's only 9:33. We have all the time in the world, which leads me to a question that was asked, why use a 10-minute chart? Well, so in my mind, and this is based on my experience, I like to have a multiple of 6. So in other words, on a 10-minute chart, I want to be in a trade anywhere from a minute to 60 minutes max. So I'm looking at these candles to say, okay, what's reasonably going to happen in the next 60 minutes? Because I don't want to be in a trade past that. If I were looking at a 30-minute, then it would be a 3-hour duration, right? Up to 3 hours, right? 5-minute, 30 minutes. So I have a 6 multiplier in my head, and that's just me. That's not a rule anybody wrote in a book or anything like that. But that's kind of how I like to roll. And I think the 10-minute chart really gives me some good information about what's going on. A couple other things to note right now. We have a lower high so far, which is a good thing for our trade idea. We're up about 1 point right now. And remember, each point's worth $50 per contract. So we're just gonna be patient and wait and see what happens here. I'm sorry about that. My phone's barking at me. I'll turn that on mute. And be patient. Remember, patience is the thing. Okay. So I can't, hang on a sec. I gotta move this over. I don't know if you guys could see this or not. Sri Kiran, if I'm saying your name wrong, I greatly apologize. How do you decide on charting bar pair 10-minute studies? All right, so that's that. On the moving average cross, again, this is a personal thing, right? This is something that I like to look at. I have my moving average cross here. My fast moving average is this gold line that's kind of going around here, and it's 6 period, right? And my blue is my slower moving average, which is 26 period. And the reason they use fast and slow is because a fast moving average will change based on only 6 bars, right? So the average could move more as opposed to the longer one, which takes 26 bars. Now, I don't know why I prefer these. I mean, this is just experience I've had over a long period of time. You might decide that 25 and 10 is better, or 50 and 10 is better, or whatever kind of cross you want to look at. But what the key is, when does it cross over? Let me get my my crosshairs on. We crossed over here. And then you don't know it's crossed over until the next candle is completed, right? Which is here. And then you got to decide, is this a good signal or not? And it turned out to be a good signal long term. If you wanted to really wait long term, sometimes it's a good signal, sometimes it's not. Now this particular 7 to 710 bar fast crossed under the slow. By the time we got to the next bar, it's like, yeah, that was a good signal. And again, past performance not indicative of future results. We're looking back in time, but this was a darn good. This is a darn good signal. Now, I don't think moving crosses, you should use them just as a standalone. Okay, crossover, it's time to sell, or crossover, it's time to buy. But you look at other stuff. What's going on with the oscillator that you're using. What's going on with the the volume profile. I had the VWAP up before. What's going on with the VWAP? Those kind of things. So that's kind of my point of view on it. But the 6 and 26 is nowhere near magical. It's just something I'm used to and something I've experimented with over a long period of time. Ray says my magical rectangle actually touched accurate dips on the VWAP. Yeah, it might be a fluke. Busy's got another tip for you. It says hold the control key on your keyboard and wheel will zoom in and out. Let's try that. So, oops. Yeah, there you go. It does work. Awesome. So, Gustavo, so I don't look at a 1 and 5 minute. my whole thing is patience, right? I think you have more of an advantage when you have, let me put it this way. I think you have less of an advantage when you're trading a really small time frame than you're trading a large time frame. So that's just kind of my thing. I do look at a 30-minute. I do look at a daily. I do look at a 60, but I have it on another screen right now. And I just, for presentation purposes, it's hard to have all these screens up. It's hard to see on your end. So for sure, I want to look at a 30. And for sure, I have a daily, and then I'll have the 10-minute. I don't go lower than 10 minutes, but again, you're going to customize your technical analysis technique to your personality, to what your stick. My opinion is you could be successful doing this. It's very hard. A lot of people fail trading this, trading futures. But I think once you identify a niche that you're good at, and you could see things that are starting to make sense to you, and you could zone in on it, then you have a better chance. So if your thing is a 5-minute and a 1-minute side by side, and you're making your trade decisions based on that every day, and you're kind of looking for patterns and developing muscle memory, I'm all for it, for sure. Anyway, sorry about that. Sorry, a little digression. Herbert says, "Sorry, Jim, I had to get 9 this morning." Now, yesterday it was you were cutting your grass. Today, I'm teasing you. I actually had to walk the dog super early today because it does get kind of hot here in Charlotte, North Carolina. So I literally was out there at 5:30 this morning. It's only 72 degrees. It was perfect. Wilson asks a good question. So, and I'm going to go off in a whole sidetrack right now, but he says this may be a dumb question, but is it better to trade on a PC because Mac you will need to run virtual software? This is a PC-based platform, development platform, like I said, very powerful. And in my opinion, it's worth the extra $400-500 to get a PC instead of running parallels on a Macintosh. I think the performance is better. I think the hardware is cheap. And don't forget, there's very few things you could control in trading. You can't control the price. The market's bigger than all of us, right? If all of us decided right now, or we're going to buy 10 contracts in the E-mini S&P and drive the price up, we're still not big enough, right? So you can't control price. You can't control what happens at the exchange. You can't control how many bidders are ahead of you or how many offers are ahead of you. There's virtually nothing you can control other than your hardware, right? Other than your hardware, your computer, your screen setup. Hopefully you have a really good internet connection wherever you're at. But other than that, most stuff's out of your control. So the stuff you can control, spend a couple extra bucks, right? I mean, it's literally, the idea is here, I want to make some money in the long term. This is why I'm doing this. And, give yourself the best tools you could afford to give you a chance at that. So I'm all for just go out and get a better PC. You don't have to spend $2,000 on a PC. They're really good right now, and they're really relatively inexpensive. And I know I'm going off on a tangent again. I apologize. So our trade's kind of going south against us, actually going north against us, which is okay because that's going to happen from time to time. Again, remember, this is a strong market. This is a really awful candle for us. The one before this one right here. We're driving up right here. This is a big wick at the bottom. Buyers came back in and pushed this thing back up. And it's really a great way to take a look at this because it's such a low volume day and so slow moving. This is a great demonstration. And so, we missed our exit by a couple of ticks. I'll tell you how many, and that's going to happen to you sometimes, right? It's going to happen to you sometimes. 40, 80, 83 and a half. And we got down to, so we missed it by 2 ticks, right? You could say, okay, we missed it by 2 ticks, but that's okay. That's going to happen. And I'm going to write down in my notepad at the end of the day, and let me show you what I do. This is another pretty good. Oh, I didn't even talk about any of this stuff yet. Oh my goodness, I am remiss. I'll talk about this in a second. Somewhere in red. I mean, these are notes that I've kind of developed over the last couple of weeks, and it's when I do something good or I do something bad, I'll type it in. Better yet, if you write it down on a notepad, it's even better. It'll help you remember it. But just kind of read these in the morning, just to kind of remember, hey, these are the mistakes I made, and that's kind of a tip. I know it sounds kind of weird and old school and not sophisticated, but it's a good thing. The other thing I do in the morning is I check my notes, right? So we had some planned economic releases come in, right? So planned economic releases are things that we know is coming, right? So we can go to the CME Group economic calendar, or we can go to Econo Day, or we can go to Forex Factory, and we can see what they're going to be. And not only could we see what the schedule is, but we can also see what the consensus is, right? There's a group of economists and other big brains out there in the world that kind of come up with what they predict or forecast the number is going to be, as an example, for the MBA mortgage applications composite index. They'll say, okay, we think we're going to increase by 1.8%. And then the number comes out and it's like, okay, we increased by 1.6%. So it was close to the expectations, right? It wasn't totally out of whack. And so it didn't drive the market, move the needle either way. I like to keep track of the mortgage applications and the refinance and all the housing data, because I think it's an important tell on what's going on with interest rates. What's what folks are thinking is going to happen with interest rates, what's going on with the supply chain and things like that. I mean, Toll Brothers is a great example. Toll Brothers is a national builder for residential and commercial real estate, and they killed expectations, right? The EPS yesterday was supposed to be, projected at 1.54. Their earnings per share, it came out at 1.87. But then today kind of settled down. And when you read the fine print, you realize that they're having supply chain problems, right? So that's it, that's some of the fine print, but it gives me information about what's going on to help me forecast what I'm going to do today, tomorrow, the next day, next week. Best Buy, another one, crushed it, right? Everyone's buying stuff at Best Buy. and the reason I look at Best Buy is because it kind of crosses socioeconomic barriers, right? I mean, everybody buys something at Best Buy, whether it's a TV or whatever it is. It's a really nice kind of global, not global, but U.S. based benchmark for me. And so I look at that. Dick's Sporting Goods today, I think, I don't have the exact numbers, but I heard through Bloomberg TV that Dick's Sporting Goods, exceeded expectations on their earnings report also, suggesting, okay, people are are going out now. This COVID thing is very problematic still, but it's going to get better. And so we're going to make sure our kids are playing baseball, football, whatever it is. And so they did well. G7's going on. That has, really that's all about Afghanistan right now, horrible situation. And then upcoming FOMC meetings. I want to know when the Federal Open Market Committee meetings are coming. Big deal. They're driving this boat right now for the stock index futures for sure, for the equity markets for sure, with respect to their interest rate policy and with respect to their asset purchases. And that's a whole webinar amongst itself. It'll drive me crazy. So, really, my whole point is I like to come up with these in the morning. Today's August 25th, Wednesday, and kind of get a real good flavor for what to expect, what not to expect. The one thing we can't control is unexpected news, right? So, President Biden goes on TV and says something that was unexpected, and good or bad things could happen as a result. Geopolitical events, something could happen we don't know about. And it could kind of trigger a knee-jerk reaction in these markets. So it's something to think about. And all this other stuff, stuff I look at also. Let me just talk about it. We have time, right? We have time. Let's take a look at our trade before I go too far in the weeds. And let me answer any questions first. Okay, so Tova, I don't know what the answer. I don't know why you're getting that message. But what you could do is you can go to help just to take a screenshot of that and click that email support, send it to these guys. The support team's spectacular, and they'll email you back an answer. Help, email support, click on that, do a screenshot, send it over, or just kind of type it in. It doesn't matter if it's a screenshot or not. And then they'll get back to you right away. Okay, so Rodolfo says its minimum margin is still high for my MXN money. I'm not sure I understand that. Rephrase that. Whose minimum margin? Are you talking about day trade margin? Are you talking about overnight margin? Are you talking about exchange minimum margin? And what's my MXN money mean? So your margins, futures trading, day trading margins are very low. And that's a double-edged sword, right? Remember, this market, one contract right here, I'm going to multiply the notional value of my purchasing power right now. I'm going to do the math for you on my cell phone. Let's say the price is 44.88. Well, it's close enough. 48.88. I'm going to multiply that by 50. It's going to give me a notional value of my position of $224,400. That's a lot of market power. That's way more than the $8,000 notional value you'll get trading an ETF. So the day trade margins here, that's a double-edged sword, right? It could work for you as well as against you. So be careful with that, number one. But number two is you get a lot of bang for your buck from your capital investment here. If you have $1,000 in your Ninjatrader account and you're doing what I'm doing right now, your leverage now is 224 to 1. A lot of leverage. So be careful with that. If you're trading the micro ES, it's 1/10. It's still huge, $22,400 of notional value. So keep that in mind. And again, I'm not totally clear on your question, but okay. So Roshani asked, if you use Chart Trader to enter the trades, how does it know which account you are on? Let me show you. So I'm going to go to I'm going to unhide it. And then on the right-hand side, here's the unhidden trade panel, if you want to call it that. And then there's under account, there's a couple of different accounts, right? I'm in Sim 101. I have another one called SimCag Simi. I don't know why it's called SimCag Simi, but it's called SimCag Simi. And that's how you know, right? And then when you hide it, it stays the same. That's all. Pretty easy. So we've closed twice in my rectangle. Bad for a trade idea. We're not going to move my stop. That's another mistake, right? Another mistake is generally, even though it could work your favor. Another thing is moving your stop. We've decided on where the stop should be. And I don't like it. I don't like the fact that I'm about to get stopped out, but it's part of it. It's going to happen sometimes. Ray says read sci-fi. From YouTube, isn't a 10-minute chart too much for day trading? No, I guess so. Again, my point of view is patience. There's going to be 2, 3, maybe 4 good trades a day, which makes this the most boring job in the world, right? Unless maybe you have 3 or 4 different markets you're doing a trade on also. But this is just my technique. This is how I roll, right? This is I would rather not over trade. That's another no-no. Don't do too many trades. The bid-ask spread tears you up. The commissions tear you up. The exchange fees tear you up. Don't over trade. Look for a niche. Look for your groove. Look for a place to be, and be patient. I guess. Again, this is my opinion, though. I mean, if you wanted to day trade and just be clicking away, and you're good at it, that's another thing. But the more trades you make, the harder it is to have a winner on every trade, right? And there's a great, again, Mark Douglas, the disciplined trader, talks about it. He talks about, how many traders he's seen, do really well on their initial trade, first two or three trades in the morning, and then give it all back in the afternoon, right? And then do it again the next day. And that's a thing. That's a real thing. So again, looking for 1 or 2 good trades, and then, doing my money management, then moving on to the next one. Rodolfo says, thank you, Jim. I didn't see it that way, but it makes a ton of sense. Oh yeah. I mean, just be careful, man. Just be careful. Okay. So Herbert, thank you for that. I got an assist from Herbert. Please. Okay, so Ray says, could you please, hang on, let me move this over so we can see it. Can you please contract the x-axis for just a second to see how the resistance box lined up with the prior highs? Yeah. I think what you mean is you want me to do this? We're right at it. Is that what you wanted me to do with my crosshairs? And again, though, remember, the rectangle I drew is just kind of I eyeballed it, right? And it was just kind of like, it's something that I drew, based on experience. I was like, all right, we haven't closed here yet. We haven't closed here yet. We haven't closed here yet. And as a matter of fact, it's not valid anymore, right? Because we closed in it once, twice with this doji. And then now we're driving through it. We're driving through it. So from a support, from a resistance point of view, we're gonna have to adjust, right? And I'm moving this thing up here to the top of the candle. And now that's where we are, right? And so it's got to be dynamic for sure. But once you get, 1, 2, 3 bars that are holding their own, then you could use it as a good signal. Again, my opinion, but I don't know. The ladder and the dome both have the ability to toggle between accounts if you have more than one account. Yeah, so Syed, I took VWAP off just to kind of, we could add it back pretty easily. It's order flow VWAP. I'm just going to right click again. Everything Ninjatrader is right click, and boom, you got whatever you want at your fingertips. But I'm just going to scroll down on my list of stuff I could add. And let me just show you how to add it really fast. Order flow VWAP right there. I highlight it, and I go down to the bottom because I want to move it from available down to configured. And I'm going to go ahead and add it. And then when I highlight it once it's down here, and I could change my different levels, right? Change my different levels. And one thing I know from experience, I want to change the middle area to white, right? And actually, we're going to do that for all of them just to make it easier to see. We'll just have the lines. I'll leave the third one there, the third deviation the same. Hit apply and OK. And so that made it worse, Jim. That was bad. It was a bad idea. Hang on. Let me fix that. I'm sorry. I thought it was going to be helpful. I'm going to go back to VWAP. I'm going to go standard deviation color. The second one, we'll make it light blue. Make it light blue, or even light green. Just something to give you a visual. And I'm a little bit handicapped because no, that's not good. Can't see that. One more try. We'll try one more time. I'm gonna go order flow VWAP, and I'm gonna do honeydew. No, let's just make it light blue. Or cyan, I don't know, light cyan maybe. See if that's going to help us. All right, it does and it doesn't, because I have the volume profile in the way. But basically, if you follow the first standard deviation bar, the second standard deviation line, the third standard deviation line, we're somewhere in between the first and second right now. So, the idea, of course, is, hey, if we get up toward the third one, I want to sell against it. Or if we're more aggressive, as soon as we punch through the second standard deviation line, we want to sell against it. Alternatively, on the bottom, it's the same thing, right? You want to, try to get long. If we drive toward the second standard deviation on the downside, and then the third deviation on the downside for sure. So, but again, you got to line up with everything else. Line up with your volume profile, what's going on with the day, what's going on with your moving average cross, and all that stuff. So next presentation, I'll have my color scheme better for you guys, so we could kind of experiment more with VWAP. But it's kind of a low range day today. So we don't have anything order flow VWAP, and I am going to remove it and hit OK. All right, now we're already at 10 o'clock. All right, so I got some closing comments here, and then we're going to wait for the next candle. Couple of things. If you want to try a practice account, right here, put your email address in, get started. Hit the download button, take you to the next screen. Real easy to do. 14 days, real time, free trial. Okay, that's kind of number one. If you want to talk to somebody, call that phone number up there at the top of the screen. There is an August promotion, right? The August promotion. Open up and fund by August 31st, and you can have up to $200 in commission rebates. So if you're on the fence, you're like, all right, I'm going to wait till after Labor Day. Rethink that. Just rethink that. Maybe you could open and fund it. You don't have to trade till after Labor Day, but it's something to think about. All right. I'm going to type in some contact information for me. Should you be interested in talking to me or sending me an email or anything of that nature, I'm going to leave this up here right now for the folks that maybe don't have a chat box. The 14-day trial, if you don't go to the homepage and you want to go to somewhere else, here's another link for that. To open the account again in August, you're going to go here. I'll type that in. My personal email address, jim.cagnina@ninjatrader.com. Feel free to reach out to me by email, and then I will get back to you as soon as possible. And here's my direct phone number. I know I'm being brave and giving this out, but believe me, I'd rather talk to you guys on the telephone than all the other stuff I have to do administratively as part of my job. So don't it's okay. Just give me maybe 20 minutes after the event today for me to get some coffee and water and I don't know, an apple or something like that. Anyway, Jonathan, thank you for that. Thanks for coming. Remember, starting in September, we're going to have a whole bunch more of these that we're going to do. So just stay tuned. We're literally building. We're building them. They're not all going to be in this tone. Some of them are going to be different. There'll be a futures trading 101. There'll be product specific events. All sorts of cool stuff that we have planned. So in closing, for trade management point of view, right now, I wouldn't change anything. Right? I'm gonna. There's a couple different things you could do. There's three things you could do right now. One is just say, you know what, my 60-minute window is up. This trade didn't work for me. I just don't see anything good happening the rest of the day. I'm just going to get out. Just going to liquidate my position. That's number one. Number two, you could say, I'm going to let it ride. I'm just going to let it ride. I'm not going to do anything. I think my trade idea was a good one. We're still kind of bumping up here against my area resistance, even though I had to keep pushing it up. If I get stopped out, it's only 4 ticks away, and my risk, it wasn't that bad today. That's kind of number two. Number three is you could tighten up things, right? You could tighten up your targets. I could pull my limit order higher. I could bring my stop lower. I could tighten up my range, my risk reward range on the trade if I want. Me personally, I'd probably let this one ride and just see if my magical orange rectangle holds and we eventually get a pullback to the point of control. Notice now the point of control is a little higher. It is dynamic. It's a little higher than where my entry is, but I think it's still a good entry. So I'm going to stick with it and I'm going to watch it. I'm going to come back in a half an hour and see what happens. And I'm going to type some notes on it to say, yeah, your patience paid off, low range day. Good execution. You should have probably waited a little bit longer and been more conservative on your sell and tried to get a higher price, but we didn't know what we didn't know, right? So anyway, those are good notes to type in there right now. You are welcome, everybody. And that's it. I just want to remind you, trading futures, options, and futures involves substantial risk of loss, not suitable for all traders and investors. Just be careful with the leverage. We're trading on a real-time sim account today. Past performance not indicative of future results. Keep all that stuff in mind. And let me leave you with this. Be safe out there and be good to each other. Take care. Thank you.